Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening in the economy in the United Kingdom because things are not going well. In fact, they're going seriously off track. So, if you've been following the news, you'll be aware that interest rates were recently cut by the Bank of England by 25 basis points. They're now down to 3.75%. And you can see from this chart that that's the lowest level since the start of 2023. So, that's almost 3 years ago. So that tells us that things aren't going to plan because the reason why you cut interest rates is firstly because you think inflation's under control. I'm going to have a look at inflation in a moment. But more importantly, because the economy is slowing down and you need to stimulate growth. And that's basically what the Bank of England is trying to do. Now, before we get into the details on all of this, could I firstly ask anybody that hasn't subscribed yet to please hit that subscribe button, particularly for these UK videos, because I'm trying to make more of them, but they don't do as well in terms of views. So if you can hit the subscribe button, it helps with the algorithm and also tells me that I'm on the right track and making the right sort of videos because I'm trying to hone the videos to meet everybody's desires. So if you can tell me that you like this video, that would help. And also, I'd like to mention that I'm running a competition at the moment to win a house that I own that's located close to one of the best beaches in the whole of England. So if you want to own that property mortgage-free, rent-free for the rest of your life, then please buy a ticket in my competition. They're priced at £5 each. You can see the QR code on the screen now, or there's a link in the description below, and I've also pinned that. But if you're not interested in living by the sea, having fish and chips and a pint in the English fresh air, then I'm also offering an alternative of £250,000 in cash in any currency that you like. So if you'd like to support the channel in a slightly different way, then please buy a ticket. This chart shows what's been happening with inflation in the UK over the past 12 months. And as you can see, the latest data for November shows that inflation came down to 3.2%. And that's actually the lowest level since March of this year. And you can see that over the past 2 months, inflation has come down significantly. And the target rate for the Bank of England is 2%. So you might be thinking, well, why are they reducing interest rates now when inflation's still at 3.2%, if not at 2%? It's because of the momentum. You can see from this graph that momentum is bringing inflation down, and that momentum is likely to continue. It's like when you roll a ball down the hill. As it starts picking up pace, it's actually quite difficult to stop that ball rolling. So the Bank of England thinks that inflation is moving in the right direction and things are pretty much under control. If we expand the scale of this chart to show what's been happening over the past 5 years, you can see that we had this huge surge in inflation after the COVID-19 pandemic ended and everybody started spending like crazy and there was a shortage of a lot of things, so prices went up really rapidly, and at one point they were rising by more than 10%. In 2024, inflation started to come back down under control. It then rose again at the start of 2025, but now looks to have turned the corner and is moving exactly where the Bank of England wants it to. But if we have a look at food inflation, it's a slightly different story. You can see that in November, food prices increased by 4.1%. which is almost 1 percentage point higher than general inflation. And the reason why food prices are rising more rapidly than general prices is predominantly linked to Brexit. When the UK decided to leave the European Union, it had to cut its free trade with lots of European countries, and it's still buying lots of food products from those European countries, but there are now taxes associated with those imports. So that's pushed up the price of food. And the reason why we look at food prices is because it tells us what's happening for the poorest members of society, because they spend a much higher percentage of their income on food. But things aren't going quite as well if you don't have a lot of money. Now, one of the things I wanted to get into is what's going on with the money supply, because as well as interest rates, the money supply has a really big impact on inflation. If you remember back to the pandemic, one of the things that the USA and the UK and lots of other countries did was to increase the supply of money to try to boost the economy. And the way that a government does this is by buying back its bonds. So a lot of the governments were buying back bonds. That basically converts those bonds into cash. So the holders of those bonds then have cash and they need to do something with that cash. So a lot of financial institutions will then increase their Lending, they will give out more money to people in the form of loans. Therefore, people have more cash. They go and spend those loans on something, whether it be property or cars or holidays or refurbishing their kitchen, doesn't really matter. They're spending, and then all the people that are on the other end of that, if you're fitting a kitchen, or if you're selling that car or whatever it might be, you then get a lot of cash and then you go and spend. And so that helps to increase the money supply and increases spending, and therefore pushes up demand and helps with growth. But it also pushes up prices, because when people are spending more and buying more, then prices tend to go up. So I wanted to have a look at what's going on with the money supply in the UK. And you can see here the pronounced impact of the pandemic. So as the pandemic came to an end in 2021, spending started to rise as a result of the fact that the UK government increased the money supply significantly. And it spiked in the middle of 2022. You can see that there was a huge increase in September of that year. After that period, it started to come back down. So the government started to pull back on the increase in the money supply. And that continued through to the middle of 2024. But you can see from the end of 2024 and in 2025, the money supply has been increasing again. So the UK government, since they took over, have been pumping money into the economy to try to stimulate growth. But unfortunately, when you do that, it does drive up inflation. So that's what's been happening. That's one of the reasons why inflation has gone up over the past 12 months or so. But as we just saw, inflation is now coming down despite the fact that the money supply is still increasing. And what that tells us is that there are fundamental problems with growth in the UK right now. Now, if we have a look at this chart, it shows the year-on-year movement in wages in the UK over the past 3 years. And the scale on the right-hand side of this chart goes from 4% at the bottom to 9% at the top. So you can see that throughout the last 3 years, wages have been increasing by more than 4%. So that's actually quite a lot when you're looking at a potential inflation rate of 2%. When wages are going up by significantly more, that's obviously going to push up demand and prices because people have more cash. And if we look at the latest figures that have been published for October, we don't have the November figure yet, it shows that year on year, wages are up by 4.7%. So once again, that's materially higher than inflation. Inflation's only at 3.2%. And a 4% increase in wages is good news if you're working, because obviously you're getting paid more. But it's actually quite bad news if you're an employer. And one of the problems that employers are encountering at the moment is that Rachel Reeves increased the national insurance contribution for employers back in April of 25. The rate that employers pay increased from 13.8 to 15%, an increase of 1.2 percentage points. But importantly, they also reduced the threshold on which employers pay from 9,100 of earnings to 5,000 of earnings. And that meant that a whole lot more people were then pulled into this bracket. So it increased the cost significantly for employers. And it's estimated by the Bank of England and the OBR that the annual cost to businesses in the UK is somewhere in the region of £25 billion. So that's the additional payment that all these companies are now having to make in terms of tax. It's tax in a different form. So it's called national insurance or national insurance contribution, NIC, rather than tax. But it's still tax. It's still basically money that you're earning that you're having to hand over to the government. And that's had a really negative impact on companies and employers. A recent Bank of England survey showed that 64% of firms have now got lower profit margins as a direct result of that national insurance increase. 44% of companies in the UK have reduced their staff, and 37% have raised their prices. So all of that will have a negative impact on the long-term growth of the UK economy. And in terms of the impact on the jobs market, the Office of National Statistics recently announced that year-on-year job vacancies are down by 12% fall, and there's been a decline in 16 out of 18 sectors in the UK. And the number of unemployed people per vacancy has risen to 2.5%, which is the highest level for 10 years. And that's excluding COVID, obviously, because everything was off the scale when we had the COVID pandemic. So if we now have a look at what the real life impact of this is, this chart shows the unemployment rate in the UK over the past 12 months. And you can see that the latest figures for October represent a huge increase compared to where it was back in November of last year when it was down at 4.4%. It's now running at 5.1%. If we expand the scale of this chart, you can see that that's significantly higher than any time in the last 3 years. And if you look at the trend here over the last 12 months or so, you can see that unemployment is starting to take off. Now, retail sales are an important metric for any country because it tells us what domestic demand is. And this chart shows the year-on-year movement in retail sales in the UK over the past 12 months. And you can see that the latest figures for November show that retail sales only increased by 0.6%. And when you take into account the fact that inflation is running at 3.2%, that tells us that people are actually buying less because year on year prices are up, but retail sales aren't up anywhere near as much as inflation. And 0.6% is not translating into a lot of growth for the UK because the UK consumers are buying a mixture of both home-produced goods and imported goods. So some of that increase in retail spend will be on imported goods. And if we have a look at what's going on with GDP, these are the official figures that are published quarterly. So they're every 3 months. And you can see that the latest data for the third quarter, which ended in September 25, showed a year-on-year increase of 1.3%. But when you look at the trend of what's been happening in the last 4 quarters, it's been coming down. So that growth is starting to slow down. And if we look at what's going on a monthly basis, this chart shows the month-by-month change. And you can see that in the last 4 months, it's been a complete disaster for the UK. In July, we saw a 0.1% fall month on month. In August, it came in at 0%, so no growth. And then in September and October, which are the latest figures that we got, we saw a further fall of 0.1%. So this tells us that GDP is now in decline in the UK. And it gives us a very strong indication that if this continues in November and December, which I think is likely, then the UK is likely to report negative figures for the final quarter of 2025. And 2 consecutive quarters of negative figures would equate to a recession. So what's the summary and conclusion today? Well, I wanted to post this video because we've been following what's going on in the UK, and whenever the Bank of England reduces interest rates, it's always seen as a positive sign. Everybody breathes a sigh of relief, particularly if you've got debt that's on a floating rate. So it's reduced the cost of mortgages for a lot of people. But the reason why the Bank of England has reduced interest rates isn't because inflation is now completely under wraps, because it's still running at a higher level than it wants it to. It's at 3.2% versus 2%. However, when you look at the underlying fundamentals for the UK economy at the moment, they are not good. There are warning signs flashing all over the place. Now, interestingly, Rachel Reeves had her budget recently. And in the run-up to that budget, she was talking about a black hole of up to around £20 billion. And everybody was very concerned that she was going to hike lots of different taxes to try to recover that black hole because she said she had to balance the books. However, what she didn't say at the time of the budget was that she'd been told before the budget announcement that the black hole had disappeared. Now, one of the reasons why the black hole had disappeared is because of the increase in the revenue that the government has been pulling in as a result of the increase in national insurance. So this was seen as an under-the-radar way of taxing businesses. It wasn't officially a tax, it was just national insurance. But the bottom line on that increase is that it's damaged a lot of businesses because we've seen not just the rate going up from 13.8 to 15%, but also the number of people who are now actually being caught in that net increasing hugely because you only have to be paid £5,000 a year to now be eligible to have to pay that national insurance contribution. So this has increased the cost for a lot of businesses, particularly those that have lower rates of pay. So in the retail sector and the hospitality sector, bars, pubs, restaurants, all of those sort of areas. And they've been really struggling anyway, because as we saw, retail sales have been struggling to go up. So consumers in the UK are cautious at the moment. They're not spending as much in terms of the growth as everybody would want them to. So those businesses are suffering from both sides. They're not getting as much income and their costs have gone up significantly. Now, as a result of this, we're now starting to see unemployment taking off. It's at its highest level for more than 3 years. And that's a major concern because when you've got people who aren't in employment, you need to find some way of getting them back into employment. But as we've seen, the number of job vacancies has gone down significantly. It's down by anywhere between 12.5% and 25%, depending on which agency you're looking at. So this tells us that there are real big problems right now because people are out of work, they can't find jobs, and companies are struggling to be able to make profits. We talked about the fact that in the official survey, we've got lots of companies that are saying that their profits are down over 60%. Staff are going down as well. They're actually making people redundant. And the current environment is very difficult for a lot of companies. So all of this represents seriously bad news. And the problem that the UK government has is that it's very difficult to turn all of this around. The reason why Rachel Reeves increased the national insurance was because she needed to pull in more money for the government to be able to cover all of the things that it's spending cash on. And so she can't reverse that. But the problem is, if she's damaged businesses in the UK, then over the next 6 to 12 months, we will continue to see those companies suffering. They won't hire as many people. They may even start making people redundant or having to close down. And this is all coming at a time when the UK needs businesses to be recruiting more people to get all of the unemployed back into the jobs market. So the overall summary of today's video is that the recent reduction in interest rates by the Bank of England tells us that there are fundamental problems going on right now in the economy. And those problems are going to be very difficult to fix. We're seeing GDP continuing to contract on a monthly basis. It's likely that the UK will report falling GDP in the final quarter of 2025. And if that carries on into 2026, the UK will be in recession by the end of the first quarter. So hopefully you've enjoyed today's video. You found it useful, informative, and thought-provoking. That's what I'm trying to do, provoke some thoughts. If you have liked what I've said, then please give me a thumbs up. Please subscribe if you haven't done so already. Don't forget that you can win my house by the sea down in the southwest of England, which you can get for only £5 ticket. You can see the QR code on the screen now, or the link is in the description below. If you're not interested in that, then I'm offering an alternative of £250,000 in cash. It's a great way to support the channel, have a bit of fun. So hopefully you'll buy a ticket. Thank you for watching this video all the way through to the end, and thank you so much to everyone that's supporting me in other ways. If you bought me a coffee, sent me a YouTube super thanks, or signed up as a patron, YouTube member, or buy me a coffee member, really appreciate that support. And here's something to put a smile on your face.
Well, that's a beauty. You trading, huh? All right, hold on. Here you go, little buddy. Fair deal. Well, that's a beauty. You trading, huh? All right, hold on. Here you go, little buddy. Fair deal.